Hi, good evening, everybody. Thank you for joining us for this live webinar on the MT5 Candlestick Trading Strategy. Right, my name is Stephen Ong. I'm your presenter for tonight's webinar. So we'll be starting the webinar right about now, around 7 p.m. So I will give some more time for a few attendees who's about to join us. So meanwhile, do scan the QR codes to sign up for the demo accounts and the MT5 trading demo accounts and trading accounts to try out the most advanced trading platform designed for retail traders. And do read through the disclaimer and I will speak to you soon. Right, thank you for joining us for this live webinar on MT5 Candlestick Trading Strategy. Right, my name is Stephen Ong, right, your speaker for tonight's session. And I'm a senior account executive with Phillip Futures and Phillip Investment Specialist with Phillip Securities. So before I begin our presentation proper, just like do a sound check. If you can hear me loud and clear, you can just type yes into the question box. So during the webinar, if you have any question, do type them into the question box and I'll address them during the Q&A session at the end of this webinar. Hey, great, looks like everybody can hear me clearly. So I will begin my webinar as of now. So good morning, good afternoon, good evening, everyone. For those who join me from the foreign countries and not from Singapore, either it's a good morning or good afternoon, and to all Singaporeans who join me, good evening. Once again, I would like to thank you for taking your precious time off right from busy schedule to attend this webinar. And for those who just joined in, right, my name is Stephen Ong, your speaker for tonight's session. So I'm also delighted to share with you a topic which I'm passionate about. Right, so good morning, good afternoon, good evening, everybody. So to all the foreign audience who just joined us, so I'd like to thank you for taking time off right from busy schedule to attend this webinar. So for those who just joined in, I'm Stephen Ong session. Right. So okay. So if you're new to trading, Phillip Futures is the first company to introduce MT5 to retail traders in Singapore. So not only is MT5 the most advanced trading platform available in Singapore, it is also completely free to use with zero commission transaction costs and amazing functionality and features. Right. So MT5 is not only the most sophisticated and user-friendly trading platform ever introduced in Singapore, but it's also the best trading platform ever conceived, specially designed and built for retail traders that is absolutely free to use, no platform fees, no data fees, and most importantly, zero commission. Okay, so MT5 combines the most advanced technologies of order execution and distributed computation so that traders can create and implement their own trading ideas with this click of the mouse. Okay, so that's what tonight's topic is about, MT5 Candlestick, which is a topic which I'm passionate about, right? How to trade with this MT5 Candlestick strategies, right? With for stocks, CFD, FX or commodities market, right? So with this MetaTrader 5 trading platform. Right, so what are you waiting for? Right, scan your QR codes and download a copy of this MT5 from our website and try out our platform after this session. So choose and trade with the most advanced trading platform in Singapore. Okay, just a brief intro myself for those who just joined me. Right, this is Stephen Ong as a stock and Forex futures brokers. I've been awarded for contributions over the years as a CFD specialist with Phillip. And I've also been invited by SGX to share my knowledge and expertise about investment and investing in stocks and shares. Right, moreover, I'm a regular contributor to Phillip Futures and Phillip Securities market research outlooks, and I'm also a stock market commentator for FM 95.8 and 96.3 about the investment outlooks. So tonight my goal is very simply to assist traders like you, right, who are interested to develop solid trading strategies suitable to trading interests, risk tolerance, and resources, while remaining flexible enough to capitalize on market opportunities when they arise. So that I hope able to provide traders and listeners in this webinar with the market news in a timely fashion, so that when the opportunity arises, traders are able to capitalize and realize their financial objective and well effectively managing market risk. Okay, so I want to equip traders, right, whether you're beginner or experienced at all, right, to all who are listening in, to benefit financially from my experience and knowledge, right, in Forex, futures, stocks, CFD trading. And through this working relationship, right, we're able to develop better understanding of principles, factors, right, and that affects the market movement and the price action. Right, so hopefully, right, for traders who would like to embark on this trading journey with me, do remember to sign up for MT5 account at the end of this session. Right, so with this, right, we're able to start on a win-win business partnership, and hopefully we can share many successful trading stories for years to come. Okay, tonight's presentation is as follows. Okay, so basically this is the content for the tonight's webinar. Okay, the first session I'll touch on what basically is the main topic of the night, that is the candlestick trading strategies. So as most of you would know by now, candlestick is the most common and easiest form of trading system to understand, right, whether you are a beginner or advanced trader. Okay, so this candlestick pattern strategy outlined in this webinar will reveal to you the tactics of how professional traders trade the markets, right? So due to time constraint, however, I'll only be touching on two strategies which I personally use for trading, and the trading techniques that I use to analyze, define, and identify entry and exit signals and entry and exit points. Okay, so I'll also be covering the candlestick concepts and principle, which is essential to successful candlestick trading, right? And the essential process that is required for successful traders to trade in this using these strategies in the trading. Okay, so hopefully by end of this webinar session, you learn at least to know how to read a candlestick chart and what does each candle tells the trader, and should in the event you require additional training on this topic, so just don't hesitate to sign up for a Zoom training session with me right at the end of this, right? Just scan or email me or contact me to sign up for this Zoom session of extra training on candlestick, because candlestick topic in of itself is inexhaustive. Okay, so tonight is just narrowed down to two of my favorite candlestick trading strategy. Okay. After that, I'll try to answer all your questions on tonight's session. So do remember to type in your question in the question box right at the end of this first session. Right, so lastly, if time permits, I'll do a brief MT5 demonstration right on MetaTrader 5, right? So to show you how to use the MT5, right? Basically how to submit orders, right? How to read the candlestick charts, right? Using the two strategy which I've be touching on later today. Okay, I believe that most traders, when they first started out in the trading journey, right, most of us, like me, right, when I was just into this trading industry, we all be bombarded left, right, center with new trading concepts. So it could be very daunting and also at the same time confusing to learn all this information and to assimilate all this right into your trading. So basically the purpose of this trading webinar is to show traders how to read candlestick chart that is tailored not only for the beginners but also for experienced traders, right? So I'm going to explain candlestick in a way that you can master and remember, right? For more advanced trader, right, this candlestick webinar is also for you as well. So I'll be touching on the powerful candlestick pattern that I believe will be of interest to you, that you would like to know more. So stay tuned because I'm going to show you some of the best candlestick pattern that only professional traders use in their trading. So are you ready? So take a deep breath, sit back, relax, get a popcorns ready, and enjoy the rest of the webinar. Okay. So let us start first with the basic of candlestick trading and how to properly read the candlestick chart in the next slide. Okay, so basically if we strip away everything you have on the chart, right? Basically what you see right here right now on this chart is the simple candlestick chart seen here. So you can see on the chart this is what they call the raw price data. And in trading jargon, this is also referred to as the naked price action chart. So the most important piece of information for a trader is that they need to know what is the current and what is the historical prices, right? What has the price action for the chart would tell traders that what has been going on currently in terms of the prices and what has happened in the past. Okay, so you can see the candlestick chart will do that perfectly well for the trader to tell the trader that how has the stock or the forex pair or whatever asset the trader is trading has been performing right for the past period that he has been trading. So the candlestick prices will tell the traders what the price is doing at any given time. So for candlestick chart, this will give traders a unique insight into the market sentiment, right? So you can see, if the price is rising, right? Basically, it tells the trader that the market sentiment is bullish. But if the prices are falling in a dark bullish bearish chart, then market sentiment is bearish. Okay, so in short, a candlestick price chart is made out of lots of little individual candles, right? That would have different shapes and which form different candlestick pattern and formations. Okay, so I will not be touching on all the different shapes and sizes. Okay, so tonight I'll just restrict on two strategies that I use on. But if you want to know all the different candlestick patterns, right, you can sign up for one-to-one and I'll teach you on all the different shapes and sizes and how this can affect the market sentiment and how it will affect the future price action of the asset class that the trader is trading. Okay, so basically, all right, as a beginner, basically there's three types of candlestick charts. This is the backbone of candlestick trading. Okay, so for bullish candlestick, right, as shown here on the left side of the screen, this is denoted by the blue candles, which shows that the price has increased over a selected period of time. It could be 1 minute, 5 minutes, 1 hour, 1 day, 1 week, 1 month, or 1 year, right? Depending on the time period the trader choose. So in other words, the closing price is always higher than the opening price. Okay, so if that's the case, then this is a bullish candlestick. Okay, so in terms of color, I mean, it's up to the trader's preference. They can choose a blue, they can green or yellow or orange, depending on how they want to denote a bullish candlestick. So basically, right, the main factor to remember for a bullish candlestick, the closing price, right, is shown here at the top left corner of this slide, right? The closing price for here, right, this horizontal line is always higher than the opening price, which is right at the bottom left corner of this slide. So when that happens, this is a bullish candlestick. Okay, so the opposite of bullish candlestick is bearish candlestick, right? So vice versa. So everything that happens in bullish will reverse, and when that reverse happens, right, you become a bearish candlestick. So for bearish candlestick to happen, right, it's the opposite of bullish, right? The closing price is always below the opening price. So as you can see here, right, at the bottom right corner of the slide, right, the close is always below the opening price, which is the top right corner of the chart. Okay, so usually the color preference for most traders will be red for bearish candle, right? Some traders may choose black or gray or other color depending on preference, but red seems to be the preferred choice. Okay, the third candlestick, which is not shown here on the chart, is that basically there's no body. Okay, so you can see here this blue and red is the body of the candlestick. Okay, so basically for neutral candlestick, which is the third type of candle, the close and the open price is the same. It's one horizontal line. Okay, so this is the neutral candlestick. Okay, so this. Okay, so another point I want to highlight is that the candlestick also gives us information about the highest and the lowest price during the price period selected. So you can see that it could be the high, this is the upper shadow or the upper wick, right? And this is the lower shadow and lower wick shown here on the chart here. So the lowest point here is the low point, and on top, the highest point. The top of the higher upper shadow is the high price for the candlestick. Okay, so the Japanese traders call this the shadow. So for other traders, American trade, they call it the candle wicks, right? So depending on the tail of the candle. So depending on whether you want to use the Japanese jargon or you want to use the American jargon, right? Shadow or wicks, right, is your fair choice. Okay, so basically in technical analysis, the Japanese candles are displayed with different types of price formation, and they are the foundation of many candlestick trading strategies. Okay, so next I'll take a look. Right, we'll take a look at this one of my favorite candlestick strategy. Okay, in technical analysis, like I mentioned, okay, this is the engulfing pattern. Okay, so this engulfing pattern involves multiple candlestick. So basically, it's two candlestick pattern. We'll call this as a two candlestick pattern. So you signal to trader that the trend reversal or trend continuation, depending on in relation to the prevailing trend, is going to happen in the near future. Okay, so these traders can utilize MT5 platform to identify this engulfing pattern, right, with the MT5 platform. Okay, so this is the candlestick engulfing strategy, which I'll touch on now. Okay, so basically in this strategy, there are two types of engulfing pattern. The first type is the bullish engulfing pattern. Okay, so for traders who are able to identify this engulfing pattern, will help them to time the markets. Right, so basically they know when to buy and when to sell. Okay, so how do they identify the bullish engulfing pattern? Okay, so this is the bullish engulfing pattern. The first type which you're going to touch on. The bullish engulfing pattern basically is a combination of one bearish engulfing pattern, which is the red candlestick you see right here on the left side of the screen, and then followed by a bullish candlestick, right, which is the green candlestick you see on the right side of the screen. Basically, the body of the right candlestick, which is a green body, engulfs the left candlestick, which is on the left side of the screen. Okay, so that means the open and close of this, the range of this green candlestick is longer than the red candlestick. Okay, so this is what they call, because of this length or this height of this candlestick, it engulfs the red candlestick on the left. So this is what they call the bullish engulfing pattern. Okay, basically what this does is that it tells the trader that generally the broader market is moving in a positive direction, and that it signals that there's a potential reversal in the prevailing trend. Okay, so basically this is a good strategy for traders if the prevailing trend of this bullish engulfing is formed, right? The prevailing trend is they're always on the bearish trend, right? So there'll be a lot of red candlestick before this small little red candlestick occurs, so always on the downtrend. And then subsequently, there's one green candlestick that pops up after this red candlestick. This is a signal to the trader that, okay, get ready, man. So try to turn from short to long or something like that, right? So time to add on to a long position and get ready to go, buy into the asset, right, to ride on the uptrend. Okay, so this should signal that there's a potential reversal from bearish to bullish, right? Traders will look for this engulfing pattern. Right, so on the other hand, by the opposite of bullish engulfing pattern is the bearish engulfing pattern. Okay, so this bearish engulfing pattern is a signal that the possible start of a downtrend, right? That means the trend is changing from bullish to bearish. Okay, so basically this is how a bearish engulfing candlestick looks like. It's just the reverse of the bullish candlestick. So basically, the most important factor, right? Two most important factors is that for bearish engulfing to be a successful formation, right? The position has to be bullish, right? That means it's on the upswing or uptrend, right? At least a series of high lows, right? Then after that, you have this red candlestick. This red candlestick has to be bigger than the green candlestick. Okay, so once the red candlestick occur, my trader usually will take profit if they've been buying the particular asset, and then if not, you'll get ready to go short, right, to start selling when you see this bearish engulfing pattern. Okay, so basically this is the same principle traders apply to find bullish engulfing and bearish engulfing. So if they want to short, try to sell the high, to try to look for bearish engulfing, sell high and then buy low. So when you see the bearish engulfing at the top of the chart, they'll sell, and then once you see a bullish engulfing at the bottom of the chart, you'll buy. That means they close a short position and then they will buy in the bullish engulfing formation is completed. Okay, so how do traders trade the engulfing pattern, right? This is always the common question that I get from my client. Hey, once you see this engulfing, how do you trade this, Steve? Right, so to exemplify how the engulfing pattern works, I'm going to showcase how to trade this bullish engulfing pattern. Okay, so basically, the opposite will be true for the bearish engulfing. So I'm going to go through the bullish engulfing. So understand the difference between bullish and bearish patterns to be a key for traders to leverage on this trading patterns for their trading advantage. So basically, the first rule is that, as the textbook states, right, it has three rules. One is to wait for the formation of the second candle, right, for the second candle of the price formation to close. Okay, so basically a close above the high of the first candlestick, right, this will highlight to the trader that, okay, this is a bullish signal. It could be a strong bullish signal. Okay, so the first thing that traders need to look for is look for the second candle of this formation to close. So close above the high of the first candlestick shows, right, this is a bullish candlestick. So this is the second candle after the formation of this bullish engulfing. Okay, the red candle and the green candle. Okay, this is these two candles forms the bullish engulfing. So the first rule that the trader wait for is wait for this second candle to form. Okay, so usually do you either choose to enter on this first entry point, if not the second entry point shown here. Okay, so the second rule is that for the engulfing pattern gets a confirm, right, once this trade breaks above the high of the second candle, which is when this candle here, it goes above the high of this second engulfing, bullish engulfing candlestick, right? This is confirmation that, right, the price is have changed from a bearish trend and maybe going up on the uptrend, right, in the upswing. Okay, so this is the second rule. Okay, so for this, right, so traders will turn long, right? So if they are able to enter the first entry price, that'll be optimal. The second entry price will be if it breaks high, right? This got to be the second chance for them to enter on, or for them to add in more positions, right? So scale in to ride on the uptrend. Okay. So usually for more conservative traders, you wait for this second candlestick to form before, right? They enter on the close of the high of this candle's second candle. Okay, so usually for them they wait until the formation is successful before, right, they enter into trade. So once it's confirmed, then you enter the buy. So they can choose either enter the first entry point or the second entry point. Okay, so this is the bullish engulfing trading pattern. So this is how they trade the bullish engulfing pattern. Okay, so traders should not just focus on entering the market, but they also need to know when to exit if the trade did not go in their favor or the formation wasn't successful, right? So instead of becoming a bullish engulfing, market may turn back into a bearish formation again. So that's why traders, it's important that traders use appropriate risk management rules when trading with this bullish engulfing pattern. Okay, so traders may place stop loss right below the low of the second candlestick. Right, so this is a possible exit point, right? It's shown here on the dotted line. Right, in case if this instead of being a green candlestick, it could be a red, and then price may continue to fall on a bearish downside. Okay, so that's why it's very, very important that traders have to be sure that previous trend is a bearish trend, right? Not just 2 or 3 candlesticks, but hopefully at least 5 or 10 candlestick that shows that trend has been market has been selling down at that time, and now with this big green candlestick shows that prices could recover, and with this we have this exit point here in case price may turn against the traders expectation and price may fall. So with this, right, let's see how to trade the market with the engulfing pattern using one example, the MT5 example. Okay, so why does the engulfing pattern works? So basically this chart shows why it works, because for traders, they interpret the psychology behind the engulfing patterns, right? With this formation of this candlestick engulfing pattern, right, it plays a big role as to whether or not, right, this pattern will work out. Okay, so to do that, usually I use price action plus this engulfing pattern, right? It tells the give me a better illustration and to what is going on in the market, right? So you can see basically on this chart on the left side of the screen is a bullish chart because it's on an uptrend, right? Market rally, and then you can see at the center of the screen, this is what I've been touching on for the whole night, the bearish engulfing pattern. So possibly when traders see this, right, is this a trend reversal point or trend reversal formation that market may turn on the downside, which it did. After that, prices fell. Well, it did recover, try to recover and break higher, but it failed, and prices continue to fall, and markets changed from an uptrend, and now it's on a downtrend, and prices falling. Okay, so this is the bearish engulfing. Right, so for those who are not unfamiliar with the price action strategy, right, you can join my price action trading class, which will teach you all you need to know about trading with price action. Right, so in terms of market sentiment, is shown here on this chart. So basically, this price action will show traders that on the uptrend what to look out for, on the bearish trend and what to look out for. So with the raw price action, they can tell who's winning the bulls and bears battle and who's not. Right, so basically, the shift comes in, right? The key point here is that shift comes in when the engulfing pattern is shown, right? It shows the trader that it's time to change from bullish to bearish. Okay, so that's why this bullish engulfing is so important, right, for candlestick traders. Okay, so a apparent shift in this supply demand is viewed right in this second candlestick here. It's always a second candlestick, right, that gives a signal to trader that okay, now right? The demand is drying up and supply is coming in, so the balance has now shifted from demand to supply. So when the supply overwhelms demand, the prices will fall, right? Because there's less buyer buying the shares, supporting the market, right? So sellers come and keep piling on selling to try to liquidate whatever profit they have. And those who are shorting, they just spread on and add on the misery of those who are trying to buy, right? So prices will fall, and this down trend will continue to fall. Right? So you have a series of low and lower highs over here, as you see on this right side of the chart. So when that happens, the sellers will overwhelm the buyers, and the bear trend will be formed and will form, and the price will continue to fall until we see, hopefully, at the bottom of the chart, you see a bullish engulfing, and price hopefully will reverse. Okay. Right. So usually, like I mentioned, my bearish engulfing and bullish engulfing is found near the end of the trend. Right. So that's why it's a very powerful trend reversal formation that I use to find the extreme ends of the trend. Right. So that hopefully you can capture with this formation, can capture the bulk of the price action and the price action movements, so can maximize your financial return and financial gain. Okay, so to recap the engulfing candlestick pattern strategy, first step is to wait for the second candlestick, right, to form on the close. Okay, so a close above the high, let's say for a bullish engulfing, right, the high of the first candle shows a strong bullish candlestick, right? So as long as this second candlestick close above the high of the first red candlestick, right, this is a signal that this could be a bullish signal to the candlestick trader. Okay, the second rule is that the engulfing pattern gets confirmed once it breaks and close above the high of the second candle. So the way that traders trade is that they'll break down into two strategies, either to go long right away or buy on the high of the second candlestick. Okay, so basically these are the three simple rules that I use to trade with this bullish engulfing strategy. Okay, so you just reverse the process for bearish engulfing. You want to short with CFG, then you just sell on the low and it breaks below the low of the candlestick, and you got to short right away, or you can sell low on downside. And for more conservative trader, you wait for the third candlestick to form. Right, so basically one just confirm, then you enter the candlestick. So for more aggressive trader, they usually try to buy the low of the first candlestick, or short the low first candlestick, or buy the high first candlestick. Okay, so this is the engulfing pattern, bullish and bearish. Okay, so in case if you still don't understand a single thing what I mentioned so far, you can sign up for one-to-one coaching. I'll go through this engulfing pattern with you so that you have a clearer picture of what this engulfing pattern is all about. Okay, so next I'll touch on my second favorite candlestick pattern. Okay, so this is the candlestick pattern that traders use, and is a powerful candlestick pattern for trading. So this is the candlestick NR4 strategy. Okay, so I'm going to show you what this NR4 candlestick pattern is with some example later on, so we can understand the psychology behind this candlestick trading, what the traders are thinking, whether they're buying or selling, whether who's buying and who's selling, and who's winning the battle of the bullish and bearish bear. Okay, so you can make the traders' life easier, right? So with this strategy, knowing that you can get exclusive insight to the battle, right? Like I say, between the buyer and seller, and how this NR4 chart pattern can also be used as a trigger, right, for trading with this candlestick formation. Okay, so the question is, how do traders identify NR4? Okay, so basically the NR4 pattern is defined as a trade taken at a fixed value versus previous candlestick's range value. Okay, so basically this NR4 trade is more effective taken after an inside candlestick, that is the previous candlestick is smaller than the previous three candlestick. Okay, so this NR4, right, stands for narrow range fall. Okay, narrow range. So the first initial is narrow, right? The second initial R is range, so NR4. So basically, you can see on this diagram itself, right? You have 1, 2, 3, 4, right? So these are there are 4 candlesticks, 2 green, 2 red. Okay, so we are not bothered by the color of the candlestick. Most important is to look for the range, including the high and the low. Okay, the high and the low. So you can see the, probably the biggest candlestick could be the 1, followed by the maybe the second or third. So you can see, right, definitely I hope everyone will agree with me that the 4th candlestick is the smallest candlestick among these 4 candles. So that's why this is called the NR4 candle. Okay, so what this tells the market is that right, this is the NR4 candle, right? So basically, because previously the 3 other candlestick, the range is much wider than the 4th candle. Okay, so this is the candlestick range that's the narrowest among the previous 3. As a result, you have this NR4 candle. Okay. Okay, so please take note that this NR4 candlestick needs to be, right, the range is smaller than previous candlestick, right? So in order to be so-called successful, right, in terms of the price formation for this candlestick. Okay, so to produce a even higher rate of successful trading for candlestick traders, right? They'll look at a daily chart, and then they wait for this the 4th candle to be NR4, right? With a bigger time frame, the rate of successful trading will be much higher. Okay, so with this NR4, you can apply it across different time frame, right? Small as 1 minute, right? Could be 1 minute to 5 minutes to a daily chart. Okay, so again, it depends on the trading strategy of the individual traders. Okay, so as I mentioned earlier, this NR4 pattern can be used for intraday trading. So simply just apply the same rules outlined in this guide to your favorite intraday chart. So with this strategy, right, the first opening trading hours, you could tell the trader the high of the low of the day if you're stock traders. And this NR4 candlestick pattern strategies, right, incorporate this price view so that traders can better manage their risk and set profit targets. So basically, for beginner traders who incorporate these strategies, they have to become a more proficient trader. So things like when I'm going to touch on the trading rules, like I usually do for all my trading strategies, so they can understand with example how to utilize this NR4 candlestick pattern. Okay, so you can see on the chart there's 4 candlesticks, and the 4th candlestick is always the smallest compared to the previous 3. Okay, so hopefully this is a simple illustration to show you the concept of the NR4. Okay, the first step for NR4 strategy is to find the NR4 candlestick pattern, right? Is pretty basic and simple, right? Find the smallest candlestick compared to the previous 3 candlesticks. So once that is done, the trader will mark the high and low of the 4 candles, the 4th candlestick. Okay, so when that happens, right, the traders will search for the 4th candlestick pattern. They have these 2 in mind when they're doing that. When they're searching for this NR4 pattern, they have to keep these 2 things in mind. The range of the 4th candlestick need to be narrow and smaller than previous 3 candlesticks, and the 4th candlesticks needs to be right inside the candlestick tree. Right, so as you can see that okay, right on the right side of the chart you have these 4 chart number 1, right, 4 candlestick 1, 2, 3, 4. Okay, so you can see that the first thing is to look for the 4th candlestick, which is found over here, and that this 4th candlestick, the range has been smaller, right, than the 3rd candlestick. Okay, so these are the 2 things that the traders have to be aware of and bear in mind. Okay, so the NR4 pattern in the chart is a bullish candlestick pattern because, right, usually when you see this a bullish candlestick, it will lead to a bullish move, so the price may rally in the subsequent candlestick formation. Okay, so basically what what this NR4 is telling traders that the narrow range, right, is suggesting to trader that market is going through a period of contraction, right? So there's less trading activity going on, less buying, less selling, and market is indecisive. So there's a bit of contraction. That's why the range fell, and it's the smallest compared to the rest of the previous candlestick. And then when contraction occurs in the market, right, the subsequent range will be always the opposite of range contraction. It will be expansion. So as a result, you have this range explosion or range expansion, right? Depending on how you want to define it. And with this, the price will generally lead to periods of expansion, and the price will rally and either on the up or a downside, depending on where the NR4 candlestick is formed. Okay, so this is the reason why the NR4 candlestick pattern is so powerful and is one of my favorite trading strategy. Okay, right. So the second step for the NR4 pattern is to find the NR4 high and low. Okay, so for traders who find the high, you buy on the high side, and then once you find the low, you sell on the downside. Okay, so basically the second rule, right? Basically, this is my second rule. Basically, for traders, you're long if the price break above the NR4 high, and you're short if the price break below the low of the NR4 candle. Okay, so using back the same candles, the previous chart, which is the dollar CAD. Okay, this is the previous chart. All right, this chart itself is a daily chart for dollar CAD. Okay, so this is step one. For step two, we'll zoom in into the hourly chart. Okay, so you can see that if you zoom in the hourly chart, right, instead of 4 candlesticks, you have a formation of more candlesticks because now the price has been broken down. Right, each individual candle is now in a smaller time frame. Okay, so on this, right, the second step, like I mentioned, is to find the NR4 high and NR4 low, right, which is shown on the previous chart that that is the shown on this horizontal line, these two horizontal lines. So once these two lines is formed, then now the traders, right, the trades are taken if the NR4 pattern is shown up and it breaks above this NR4 high. Okay, so traders can enter the high or the breakout. Right, I can show you with all this enter on the breakout above this NR4 high, right, and right up on the uptrend. So once it's broken the upside, traders will enter the up high and right on the upstream, right, for as long as possible. Okay, so like I mentioned, in order to have a clear view of the short-term price action, traders sometimes you need to switch focus to the small time frame, right, so that from a daily to an hourly chart as seen here. So for stock trader, usually they'll really buy or sell if the breakout happens right during the first 5 to 50 minutes of the opening range, right, for the new trading day. Okay, so this is zooming into a smaller time frame, right? Once the high and low is denoted, right, once the price break above the high of the NR4 high, right, trader do usually enter on a breakout and hopefully right on the uptrend. Okay, so this is the second step. So the third step for the NR4 strategy is to place stop loss below the NR4 candlestick low. Okay, so we take profit using hopefully maybe with this candles trailing stop loss right below the candlestick. So for buy trades, traders will place stop loss below the NR4 lows, can show you on this chart. So these are the possible exit point. Right, so exit points are here. Okay, so once it breaks above, this is the entry point with the NR4 breakout. Right, traders will try to buy. If they fail to buy on the first breakout, maybe you can try to buy on the close of the second candlestick. Okay, subsequently the price rises and they can trail this upward movement, right, until the stop is triggered. Okay, so basically for me, my take profit strategy is quite straightforward. Right, showing on this chart, usually I use trading short, trading stop. So even though the NR4 pattern tend to lead to more, a trend trading days, right, you could run for days or even weeks. So for this, I use trading stop to take profit, and if it is triggered, then I'll look for other formation to re-enter the market. Okay, so this is the NR4 strategy. Okay, so we got 3 steps, right? So this is the 2 steps. Okay, so find the breakdown, and once the price hits your trading stop, right, that's where traders will exit the NR4 formation. Right, so in conclusion, some final words. So candlesticks, right, can be used for trading stocks, futures, forex, CFDs. So how these candles are used will differ from strategy to strategy, whether it's engulfing or NR4, and also from trader to traders. So some traders I know, right, sometimes you trade solely based on the information provided by candlesticks. Right, so they make their analysis, the trading decisions, their trade management based on candlestick patterns. So other traders, they will use candlesticks as a more supportive role and supportive information. So they seek confirmation of the analysis based on these candlestick patterns. This strategy means that traders can use candles as a broader strategy and use it as a confluence of different indicators and market informations. And last but not least, right, some traders also choose not to use candlestick because they prefer other concepts like maybe price action, right? So basically, traders need to find a balance in the tools, indicators, analysis. So to all my audience listening tonight, so do you use Japanese candlestick patterns for analysis and trade management? If yes, if there's any particular pattern you like most, if not, why not? So let me know in the chat box, right? So this is the conclusion for the night. Okay, so as you all know, I'm a Phillip investment specialist. So these are some of the personal services that my clients receive from me. So when you apply MT5 trading account, funded account, these are the level of services that you expect to receive some personal trading services from me. So I'll help you to strategize and develop customized trading plans for traders. So happy to plan your trade and trade your plan. And also, right, you get news update, right? News about why market is moving and why market is not moving, right? So through WhatsApp, Telegram, WeChat, right? You name it, I have it, right? So you have other better apps, you can let me know. So useful information, news that you can use to benefit from the market movements. And thirdly, I also help you, right, train and coach you and use MT5 and also Nova platform for new traders. I also conduct stocks Forex Futures portfolio review to help you to optimize your portfolio returns. And even if you are busy working, can help you to monitor your position and help you to execute your orders. And lastly, for new accounts activated before National Day, 8th of August 2021, okay, you receive an intensive one-to-one coaching session on advanced candlestick trading strategies upon new funded account activation. So this trading session will be conducted over Zoom, right? And this session will include trading strategy not mentioned tonight because of time constraint, and also teach trader how to find and how to trade other more advanced candlestick chart pattern formation. So what are you waiting for, right? Just scan the QR code at the end of the session, sign up for a live account, and you enjoy this free Zoom trading session. Okay, so for interested traders, open and fund a new account by the 8th of August 2021 for this free training. Okay, now I come to the Q&A session. Okay, so basically, some of the most common question that I get from my clients when they are teaching about these two strategies is that, Steve, is there a best candlestick pattern to profit? Okay, so basically, okay, my answer is that there's no best candlestick pattern to profit. Okay, because of differences in traders' experience and differences in market and of course different time frame. So for tonight's session, right, for today's session, right? Traders can add in these two strategies, which is the engulfing and the NR4 that's been taught right into their trading arsenal, so that you can use this to detect bullish and bearish reversal, and as well as trading market continuation in the asset class they are trading, right? Whether it be stocks, right, futures, forex, or CFD. Okay. So another question that I get usually is that, what happens after the bearish engulfing? So traders usually they will try to sell a long position once this bearish engulfing pattern occurs. So basically they potentially enter into a short position. So once they enter into short positions, they put the stop loss above the high, the 2-bar pattern, and try to ride out on the down. This bearish engulfing, and hopefully they will use trading stop loss to find this bearish engulfing pattern. Okay, another question I get usually is, does engulfing pattern formation includes the shadow of the wicks? Okay, usually it doesn't. Okay, the bearish engulfing usually does not have to engulf the shadow of the wicks of the previous candle, right? The most important thing is the body of the candlestick itself. Okay, so that's the main thing. Okay, so the wicks or the shadow usually is excluded. But of course, if you want to be more careful, you can include that into your engulfing trading pattern. Okay, so if it does engulf the shadow of the wicks, right, it's better. But this is not exactly the key point to look out for using the engulfing strategy. Okay, so this is the engulfing question that I usually get. Then in regards to NR4 pattern, okay, we have a question from the audience. They say, for NR4 strategy, which momentum indicator works best with it? Okay, so okay, this is a very, very generic question. So the question is that this will be covered, right? Once you open an account with me, then I'll touch on a more advanced site where I will include indicators and all that. Some of the preferred indicators that I use for this. So for tonight, right, the focus is purely on candlestick formation. So of course, there are other momentum indicators that you can add on, right? So the thing is that you can use MT5 to back test all these momentum indicator. Okay, so not just to add in, but you can use these indicators to back test whether they can perform based on the historical price action in this engulfing or the NR4. Okay, but of course, this topic itself is beyond the tonight session, right? Backtesting all that, you will require more advanced knowledge about technical analysis and about the usage of the MT5 platform. Okay, so usually, other question is the okay, I've got two questions. One question is the okay, there's what is the commission charges? Okay, if you trade through the Phillip Futures and MT5 platform, there's zero commission charges. Okay, zero commission charges for Phillip Futures MetaTrader 5 platform. But if you trade to other platform, there will be commission charges. Okay, so for tonight, we will focus on MT5 because it's zero commission charges. Okay, and what is the amount to open account? Okay, minimum, I mean, you can activate account is only $500 things. But $500 things is, you can trade the micro Forex or the micro lot of this CFD. Okay, to trade more, of course, you need, more funds to benefit from the market movements. Okay, so this is the question. So other question I have usually about the MT4 Candlestick strategy is that, I have simple question like, what is the NR4 strategy itself? Okay, basically NR4 strategy is a breakout strategy. Okay, if you know about breakout trading, right, this is how traders find the trigger point for the breakout strategy. So once you find the NR4 candlestick, right, traders will be poised to add, right, enter the market with buy stop or buy sell stop orders, right, to wait for the activation of the orders based on the breakout. Right, so this is a breakout trading technique whereby traders use this last 4 candlestick, right, to apply these strategies itself. Okay, so basically the traders will compare the range of the previous 3 candlesticks and determine that if the candlestick right now is NR4. Okay, so once they have found that, they determine this is an NR4 candlestick, they'll gear up and then they'll try to go long or short. Okay, so this is the end of the Q&A session. Okay, so next I'll touch on the MT5. Okay, so basically before I proceed to MT5 demo, just like to highlight to you, Phillip Futures is the first company to introduce the MT5 platform. To traders who both are new and to most experienced and advanced trader in Singapore. So not only MT5 is the more advanced trading platform available in Singapore, it's also completely free to use, zero commission transaction costs, and it comes equipped with amazing functionalities and trading features that you only learn to appreciate once you use this platform. So MT5 is not only the most advanced, sophisticated, user-friendly trading platform ever introduced in Singapore, it is also the best ever trading platform ever conceived and specially designed and made for retail traders that is absolutely free. So do remember to sign up for this live MT5 account after this session and download this free copy at our website and try out our training platform after this session. So I hope that end of this webinar, we're able to start on a business, win-win business partnership and share many successful trading stories to come. Right, okay. Okay, so basically I will show you how to find the engulfing pattern. Okay, so if you look at this GBP, okay, you can see that there's a few engulfing pattern here. Okay, one of them is shown right here, right on the bottom right hand corner. We have this bearish downtrend from the center of the screen right down top center to the bottom right corner of the screen. This red candle at the bottom, and this green candle is formed after that. Okay, so it's like 7 days ago, that was last week. This is the green candle that engulfed the body of the red candle here. So you can see that this is a bullish engulfing pattern. Okay, bullish engulfing pattern, and then prices rally, and now it's going up on the upside. Okay, but if you trace back further up, right here, you have another engulfing pattern. Okay, you can see that this engulfing pattern is okay, maybe a bit questionable here, but looks like engulfing to me. But prices failed to rally, and in fact it fell, and that's why the prices continue on downside. Okay, so that's why you need to have a stop loss in the event that prices fail to go in the favor of the traders long position. Then you can minimize the traders loss. But the first trade may be in the red, but for the second trade right now, traders is riding an uptrend, so hopefully they can recover back the losses that the first trade has infringed on the trader. So you can see here on the top left corner, top center corner, that there are a lot of engulfing. In fact, this is okay, engulfing here. Right, this is another engulfing here. Okay, so for traders, right, we want to trade this, just have to be careful, because right here on center is what they call the whipsaw market, my chop fest. Okay, so traders stops are usually triggered with all these long shadows. Okay, so again, but last engulfing, it's a confirmation that price is falling a downside, and prices drop and fell, create a shift low and lower highs, and this is the bearish engulfing. Okay, so this is just to show you the how to find bullish engulfing and bearish engulfing by looking at the chart. Okay, so with that, I will continue on my slide. Okay, because of time constraint, I will have to. Okay, so So do not forget to scan our QR codes to download a free copy of MT5 from our website and try out our platform right end of this session and choose to trade with the most advanced trading platform in Singapore with Phillip Futures, right? So please scan the QR code. So for fast application, you can apply with the SingPass. So it takes as fast as 3 to 5 minutes to approve your application. Terms and condition applies. Okay, so once again, thank you for time, right? So don't forget to scan the QR code to download the free copy of MT5 platform from our website and choose to trade with Phillip Futures for this Forex and CFD and futures trading. So you can scan the various QR codes for MT5 Demo or upcoming webinars, or you open a live account with Phillip. Okay, so remember, it's zero commission for US share CFDs. Okay, so that's the time I have for tonight. So for today or for this afternoon, right, depending on where you're from, thank you very much for being a wonderful audience for my webinar. So a link of this recording will be made available in our follow-up email tomorrow. So if you have any questions or queries on tonight's presentation and would like to get started or simply reply to email, and we'll be in touch with you soon. So my name is Stephen Ong, signing off. So once again, thank you for your precious time and your kind attention and understanding, and happy trading. Stay safe, stay home. Thank you.